Continuing with Part 2. Comparison. Companies must determine prices for their products that cover all direct and indirect expenses and produce a profit. Identifying your specific needs and constraints will help you determine which costing system is best suited for our company or client. In this Part 2, we will see what are the differences between conventional cost accounting, material flow analysis, MFA, and material flow cost accounting, MFCA. The first aspect that we would like to compare is the tool of study. Conventional cost accounting is a system that internally focused to identify all variable and fixed costs associated with the production process, followed by comparing input costs to output results to aid in measuring financial performance and making future business decisions. Moving to MFA, it is applicable to quantify physical input and output of an economy at highly aggregated level and measures the size of the industrial metabolism. However, MFCA is applicable to any organization that uses material and energy, regardless of their products, services, size, structure, location, and existing management and accounting system. Urrit et al. 2002, categorized EMA into two main elements, which are monetary EMA and physical EMA. Monetary EMA focuses on environmental aspects of corporate activities expressed in monetary units, such as measures expressed in expenditure on cleaner production, costs of fines for breaking environmental laws, investment in capital projects that improve the environment, and monetary values of environmental assets. Meanwhile, physical EMA refers to a company's impact on the natural environment, expressed in terms of physical units such as kilograms, cubic meters, or joules. In short, MEMA seems to be about the impact about the environment on the firm's financial performance, and PEMA is about direct effects on the environment.
So in which element are these tools categorized?
Conventional cost accounting is categorized as MEMA, while MFA and MFCA as PEMA.
Are you telling that MFA and MFCA does not involve monetary units?
Incorrect. MFA and MFCA involves are tools that uses physical units, but it also includes monetary units.
If that's the case, the method involved must be different.
Exactly. Come, let us now see the differences in steps involved. In conventional cost accounting, management identify overhead cost to estimate the overhead costs for a specific time period. Next, suitable cost driver is chosen to use in calculations. The team then estimates the figure for cost driver before proceeding to calculate the predetermined overhead rate and apply the overhead rate to the product. Next, MFA. The first step involved in MFA is identifying the relevant material flow, including relevant goods and processes. Good here is defined as economic entity of matter with a positive or negative economic value. Goods are made up of one or several substances. Next, system analysis, which is the selection of relevant matter, processes, indicator substances, and system boundaries. Thirdly, quantification of mass flows of matter and indicator substances. This step then continues to identification of weak points in the system, and lastly, development and evaluation of scenarios and schematic representation and interpretation of the results. Moving to MFCA. Steps in MFCA includes engaging management and determining roles. Management is highly recommended to take a lead in the MFCA implementation, naming the project, assign roles and responsibilities, including setting up an MFCA task force, providing resources, monitoring progress, reviewing results, and deciding on improvement measures based on the MFCA results. In Step 2, we identify the scope and boundaries of the processes. Next, we allocate cost. Material costs, energy costs, and system costs are assigned to the material outputs at each quantity center based on the proportion of the material input that flows into product and material loss. It is then proceed to interpret it and communicate MFCA results. By making material loss visible, MFCA provides organizations with opportunities to identify problems and recognize the necessity for their improvement. This helps to improve production practices. Moving to advantages of conventional cost accounting, MFA and MFCA. Conventional cost accounting is highly customizable and adaptable system which can be more flexible and firm-specific. In other words, conventional cost accounting is adapted, tinkered with, and implemented according to the changing needs of the organization. On the other hand, MFA is a tool for early detection of environmental problems and development of appropriate solutions. It is a decision tool to choose sustainable methods, and it's an ideal technical basis for planning and decision-making. Meanwhile, MFCA exposes the losses per process and for overall processes and impact of improvement measures that could be expressed in monetary units. MFCA shows benefits when it critically shows the amount of potential financial benefits from reducing material losses at each process. Besides, MFCA is a method to help achieve the target values for the production innovation indices. Therefore, it increases internal and management control. Moreover, MFCA reduces cost of waste production and disposal, reduces costs of direct material, and reduces adverse environmental impacts. It is a guide to businesses and is a source of awareness for business operating globally. Let us now see the disadvantages or drawback of conventional cost accounting. The methods and techniques in this system will vary from firm to firm and can become quite complex. It also has high startup cost to develop and implement this system. Moreover, higher skilled accountant and auditors are required. Next, MFA requires a lot of data to be implemented. There are only limited, reliable data available for developing countries. The major obstacles concerning the implementation of MFCA is collecting data and the reliability of data. Collecting physical information turned out to be the major challenge, especially precise measurement of energy and giving auxiliary consumption at the production and supply process level. In addition, MFCA requires time and effort.